Hello guys, welcome back to another Lumley trading video. In this one we're going to be going through Dollar Tree, ticker DLTR, because they do have earnings on Wednesday before the open. So to get straight into it, firstly, why has Dollar Tree been selling off so much and so strong recently? So again, firstly we have done about a 11% sell off. This was mainly just down to Sympathy play off the Dollar General earnings, which came and kind of just crumbled to the downside. Now, we went through Dollar General if you want to go and check that out, because I do think that could probably be the better buy over Dollar Tree. But we will go through the Dollar Tree analysis. So, again, we do have earnings Wednesday. Now, I wouldn't be looking for as much of a sell-off as we saw on something like Dollar General, because, again, we've already had a sell-off on Dollar Tree due to Sympathy plays off Dollar General. And again, what tends to happen is, now even if earnings are bad, it is a lot more priced in. And again, we've already done a lot of the moves. So if, say, earnings were going to send it down 20%, we've already done 11%. So now we'd only fall about 9%. But what are the key things we want to be paying attention to? So firstly, on the right, this is our anchored VWAP chart. Now, we're not really near anything too significant here, because right now we're sitting around $85. To come and take us up to this anchor VWAP would be, needs to take us up to 120, and to take us down to this downside VWAP would take us down to $40. So both are quite unreasonable on this earnings moves, so we can't really use anchored VWAPs to assist us with the analysis. So it's really just going to be reliant on standard deviation channels, which is this chart here. Now, these dashed lines, they are from a 6-month standard deviation basis. These solid lines are from a 1 year. So to go through what we're looking at, if we come to the downside, again, we would probably break through these if we get a bit more of a significant move. But if not, we do have supports at $82.50 and $80. So this is more used as a range of support. And again, if earnings now somewhat come out in line, this will probably be the support we will hold. If earnings are still a big miss after the Dollar General kind of reaction, then we do have supports down at 68 and 63.70. Again, use this more as a range. I mean, you can use them as individual levels because there is a bit more of a difference between the levels. But overall, I would use this more of a range of support. And then look for buys. And again, first targets will always be the deviation set above it. So in this case, around $80. So in a case like that, even if you buy the top deviation, you sell at the bottom, that's still a nice 17% move. So again, there's definitely some nice upside trades on Dollar Tree. And if we had a very surprising move to the downside, we would have 53 and 47. Again, I don't even really consider those, unlikely, because that would take us down to our since IPO VWAP down at around $40. And again, that is very unlikely. Those two levels are unlikely. If we get a big sell-off, 63 to kind of 67 would be the kind of the key supports. Again, if it comes out somewhat in line, we're looking around $82.50 to around $80 as kind of the in-line support. And if we start to push up, and again, if Dollar Tree performs a lot better than Dollar General, or at least better than expected, we will probably give up this whole sell-off and can kind of move all the way up to there, and then start coming into, again, what's this white line? This is our 6-month statistical mean, so this is considered fair value at $96. So we'd be looking at that, and so because that is considered fair value, I wouldn't trade the 97 first deviation from the 1 year. So again, I would kind of ignore these levels. If we get the upside move, there probably won't be too much trading opportunity, because again, then we are coming into fair value. So if we do push high though, and we get a very significant move, again, kind of coming into 112, we have again our the 1 year mean, which is fair value, and our first deviation from the 6-month. Again, still going to make it a bit more tricky to trade, and I think it's why Dollar Tree, if it is one of those stocks that push up, I'll probably just ignore the stock. It's a much cleaner move if we come down to the downside and we can start trading these supports. But yeah, I'm kind of ignoring those two resistances. Again, if we kind of spike up, I won't be looking to short them. I just won't be looking to do anything. But if we can continue past there, and again, this may even take a week or two, but if we can start pushing up to these sorts of level, 126 to 128, this is going to be a key resistance. You got the 1 year first dev and the 6-month second dev. So again, strong resistance. And then if we break up 140 and 145, again, these may even take a few weeks to kind of even hit these upper ones, but these upper ones would be some nice shorts coming into these areas. Again, on the support side, we have the kind of fair value, or at the kind of current price support, which again, if it kind of comes in line, that's where we can expect to hold. If we do still sell off though, this will be, I think, the nicest of all the trades, which would be 63.70 to around 67.90. And again, you can use these two together. They will do somewhat sympathy plays. So if we do see a Dollar Tree sell off, we'll probably see Dollar General follow suit, and then Dollar General could become the nicer trade, because again, we talked about it here, and again, watch the full video for the main breakdown. But at $98, this is our since IPO VWAP, or no, IPO VWAP. So this is really going to always be a strong support level, and we do expect to start trading back above it relatively quickly. So if we can get one more sell off from the Dollar Tree thing, we can definitely get entries close down to then $75 to $70, which would be some great upside, even if we only were able to trade it to the since IPO VWAP. That would still be a 40% move, and if we're able to give or kind of hold it all the way kind of back to the original move from where we sold off, that would be a 75% move. So I just think there's a lot more upside on a trade like Dollar General compared to Dollar Tree. But again, this analysis again is mainly going to focus on Dollar Tree. But again, I would be looking at the two together and seeing what provides the better trade opportunity at the time.